Let's do a review of everything we learned. Prequalification versus pre-approval. Prequal is only a review of what the borrower says they make, their assets, and the estimated value of the property. You may give an estimate of qualifications. On a pre-approval, you are verifying the information before you issue a final pre-approval. Having a pre-approval gives the seller a better impression of the buyer. Truth in Lending Act. TILA, Regulation Z. There are 8 parts to TILA. 1. Mortgage Disclosure Improvement Act. 2. Advertising. 3. HOEPA. 4. APR. 5. LE. 6. Charms Booklet. 7. Qualified Mortgage or QM. And 8. Loan Officer Compensation. The principal purpose of TILA is to protect the borrower from interest rate and disclosure abuse and predatory lending. TILA includes the loan estimate, or LE, and aims to make sure all the fees and costs are disclosed accurately to the borrower. Your advertising must be honest and only advertise products that you have available to you. Anytime you advertise an interest rate, you must also advertise the APR. All advertising must be kept for 2 years from last use in order to be in compliance with TILA. All files must be kept for 3 years and the CD for 5 years. The hard copy files can be destroyed once the files are digitized. The penalties for violating TILA are up to $5,000 and 1 year in jail for each violation. The Mortgage Acts and Practices Rule, MAP or Regulation N. The rule covers abuses in advertising. This includes advertising something you do not have, bait and switch, and using terms that mislead or tell the borrower they should not apply. Counseling and suitability of products and programs. As a professional MLO, it is your responsibility to counsel a borrower as to the products and programs you have available so they can make an educated decision. The loan application known as the 1003. Remember PENSIL. If you don't have all the items, you do not have a loan application. Property address, estimated property value, name of the borrower, social security number to pull a credit report, the borrower's income, loan amount requested. Fannie Mae 1003 or Freddie Mac 65 are the applications needed to obtain all the information you will need to make a credit decision. It is also called the URLA or Uniform Residential Loan Application. Home Mortgage Disclosure Act, HMDA or Regulation C, requires all lenders to collect data on all applications and report it quarterly. Mortgage brokers are exempt because they cannot underwrite or fund loans. Equal Credit Opportunity Act, ECOA or Regulation B. Age, borrowers must be 18 or older to obtain a mortgage. Discrimination, none of the discriminatory items can be used to make or decline the loan. They must be kept neutral. Underwriting or credit decision. When a complete underwriting package is delivered to the underwriting department, a decision to decline or approve must be issued within 30 days unless the file is suspended. It is then extended to 90 days. Appraisal. An appraisal is to be delivered to the borrower no less than 3 business days before closing. The exception would be if there was an AWI issued by Fannie Mae or Freddie Mac, or on an FHA Streamline refinance or an Earl Streamline VA refinance. Adverse action. If the loan is declined or canceled, an adverse action must be issued within 30 days and must explain why the action was taken. The Fair Housing Act, known as FHA. Remember that under fair lending, fair housing, and ECOA, you must allow all consumers to apply for a loan. This does not mean the loan will be granted, but they must be allowed to apply. Fair housing was amended by ECOA. Age was made exempt because of reverse mortgages and 55 and over subdivisions. TILA RESPA Integrated Disclosure, also known as TRID. Replace the GFE and TILA disclosure. Page 1 gives all the details of the loan program, the payments including escrows, and shows the total costs of the loan. If there is assistance in costs paid by the seller or lender, the credit will be shown on page 2. Page 2 contains a detailed breakdown of costs and fees that will be charged to get the loan. This includes all costs and fees. The TRID rule identifies 3 categories of tolerances: 0 tolerance, 10% cumulative tolerance, and no or unlimited tolerance. 0 tolerance. Fees in the 0 tolerance category cannot increase from the loan estimate to the closing disclosure without being a tolerance violation. The reason fees in this category are so restricted is that typically these are fees for services the creditor has control over or has access to actual fee amounts. 10% cumulative. In this category, all fees are added together. If the total that is disclosed on the loan estimate increases by more than 10% from the total disclosed on the closing disclosure, the lender will pay the excess of costs above 10%. Fees subject to this tolerance category are recording fees and third-party service fees. No or unlimited tolerance. All fees in this category can increase at any amount and are generally fees the borrower chooses. For example, if a borrower came in and chose their own title company, they would pay the whole amount even if it increases after the LE is issued. Just think, if they chose it, they pay it. Any changed circumstance results in a new LE being issued within 3 business days. The final LE must be received no later than 4 business days before closing. Business day. The LE and changed circumstance are any days the company is open, but never Sunday or legal holidays. Page 3 of the LE shows 3 comparisons, including 5-year cost,
APR and TIP,
or total interest percentage, general information on the appraisal, insurance, late payments, refinancing, and servicing. The LE may need to be signed by the lender, but this does not obligate the borrower. It only indicates that they have received a copy. Home Loan Toolkit is required on all purchases within 3 business days of the application. Consumer Handbook on Adjustable Rate Mortgages, or the Charm Booklet, is required for all ARM loans, whether for purchase or refinance, within 3 business days of the application. Home Ownership Counseling Disclosure. This is optional counseling to all borrowers at their own cost. A lender must provide information about home ownership counseling on all transactions. The disclosure is mandatory for reverse mortgages or high-cost loans. 4506T. This form is sent to the IRS to confirm that the tax return numbers provided by the borrower match their records and can help in determining whether fraud exists. Electronic signatures in Global and National Commerce Act, or the e-Sign Act, states that email and faxing are not considered electronic. The borrower must give written approval, and they must be allowed to go back to hard copy if they wish. The lender must determine, to the best of their ability, whether the borrower is able to use digital delivery. This is the end of the review.